everybody. It is Wednesday, the 16th of August, 2017, and the S&P 500 finished with a gain of 45 cents. We are above a five-day moving average, which is now rising. So if we get a higher high above that flat to rising five-day moving average, that means the intermediate term trend is now higher once again. That's technically how we look at it. Obviously, with the gap at the beginning of the week, we saw that the buyers had regained control of the short-term trend. But now, with that 50-day moving average still advancing, the 61.8% retracement holding the key volume weighted average price in that trend line, the buyers are starting to once again show that they're likely to take this market to new all-time highs once again soon. So our key level of support is now becoming even clearer because we have the volume weighted average price from the low, the volume weighted average price from the high, and the five-day moving average all clustered together in there. So over the next couple days, as long as we remain above that 246, then the buyers continue to get the intermediate term benefit of the doubt. The NASDAQ, for its part, as I was pointing out earlier today, it's only closed above this level where we are today two or three times after catching support once again near that rising 50-day moving average. So now looking at a 15-minute time frame, we can look the same way, which is the volume weighted average price off that peak and then off that low. They all kind of come together in this 143 to 143 and a quarter level, meaning that the buyers should be considered in control as long as we remain above that 143 and a quarter level. The Russell 2000 continues to show that with a declining five-day moving average, it's guilty till proven innocent. The longer term time frame, of course, we have found the buyers at the volume weighted average price from the election, and that's where we're going to need to see it continue to hold. It's not very impressive that it closed down once again with the rest of the market being so much stronger. It was actually up 4 pennies because it had a weak close on Tuesday, but down 4 pennies. We're still drastically performed compared to other markets, and with a declining five-day moving average, we have to look at it as guilty till proven innocent. One yellow light, I guess, for the shorts would be that we get rid of this data in the morning and that in the five-day moving average calculation, and that means if it stays around in this area, that five-day moving average begins to flatten out. There's nothing here that says that this market should advance from here, but perhaps it's starting to stabilize a little bit is the most optimistic way you should realistically be looking at it. Semiconductors on the daily time frame, we've got, we broke below this band of support, quickly got back up into the range, and now on that daily time frame it's range bound. Really no perceived edge that I can see on the intermediate term time frame. This will be the important level, 86.15 to 86.50, but again, there's really no edge that I can see in there. The biotech's trying to get back above and hold above the volume weighted average price from the shakeout low. The shakeout low, of course, is back here in June when it broke the year-to-date volume weighted average price and then found buyers at the volume weighted average price from the election. So right now on the intermediate term, we're still with a declining five-day moving average and still trying to overcome this prior band of support in here, and it's just kind of jury out for now. We've got the on this 30-minute time frame, of course, we can also take a look at a volume weighted average price off this peak or if off this peak, and it's nice to see that this one is holding right now. That kind of helps create the narrative that it's trying to hold in here, but the buyers probably don't gain back control till we can close above about 312.